For 130 years, OSP has established its legacy in Thailand as a pioneer in energy drinks and vitamin C drinks, with the vision to become the power to enhance life. Good morning, judges. We issue a buy recommendation with a target price of 36.06 baht, a 11% upside. Our recommendation is founded on three key pillars: diversified portfolio, strong competitive position, and affirmative valuation. Before we dive into our thesis, let us walk you through the company overview. OSP is one of Thailand's leading FMCG manufacturer and distributor, with the third largest glass bottle manufacturing plant. Its portfolio consists of non-alcohol beverage, personal care, health and confectionery, and OEM. Over 80% of its revenue comes from.
This will impact the high barrier to entry in the new players to enter to the companies. So plus with the OSP ability to maintain its leading market share for many years with 50%. So we can say that OSP has a strong domestic revenue and the cash cow in blue collar segment. Second is the OSP start to have the exponential expansion growth plan by diversifying its portfolio, by launching and rebranding the new energy product line to capture the new demand in women segment. This room for growth is shown on the graph in the right-hand side that they have an increase in number of the women white-collar workers in Thailand. And the third one is the CLMV market. The CLMV market is a new opportunity for the market in the energy drink, as the company right now is mainly focused on the newly factory in Myanmar with a leading market share of 38%.
Next is the exponential growth part of OSP portfolio. Although revenue from energy drink dropped in 2020, revenue from functional drink almost fully compensated for it. And with the continuation of health and wellness trend, as well as a newfound revenue in cannabis drink, we expect OSP functional drink revenue to grow at a 13.1% CAGR in the next 5 years. First, let's start with the health and wellness trend. As you can see from the bar chart, consumers are reducing their overall spending during the pandemic, but it is only a midterm effect, while the increase in health and wellness spending is a more permanent one. Moreover, even if immunity product is what's gaining popularity right now, however, in the future, consumer may focus on other product categories as well. And with a diverse product offering, OSP can capture any emerging consumer trend. And also, OSP has a well-established brand image, which can be seen from the ability to maintain leading market share in functional drink industry.
The new launch of the cannabis drink is expected to generate an additional growth to OSP's total revenue of 1.3% CAGR, with 19 million Thais estimated to have sleeping problems likely caused by stress from workload, personal finance, and aging society. The CBD extract in the new drink could be the new cure. At present, OSP has signed an MOU with Yanhee to develop this drink together. Yanhee is equipped with a cannabis center for medical treatment and a producer of a leading vitamin water brand. Making Yanhee a strong business partner, we believe the synergy between OSP and Yanhee to spike cannabis drink revenue growth at 81.7% CAGR in the next 5 years.
Let's move on to our second thesis, strong competitive positioning. I will tell you why we think OSP is going to continue to lead the market in the future. First off, in our analysis, we see that CBG is the only competitor on par with OSP, with a market share of 30%, and although the two have very similar product portfolio and target markets, we see that CBG has a much stronger brand presence in Cambodia, a market with a high potential. But however, we still have conviction in OSP's long-standing relationship with its customers of over 100 years, and also almost 500K distribution channels. And also, a production capacity unit of over 4 billion, 4 times to that of its sub-CPGs. And most importantly, its market dominance in Myanmar, Laos, and Thailand has already granted OSP a position to lead the market. In our ESG analysis, the company has maintained its ESG practice in all the ESG with the standards from Thailand Sustainable Investment Society. First, for the environment aspect, OSP has pledged to reduce its energy, water consumption, and also greenhouse gas emission. And the company has recently launched an MOU with Susan, a solar energy power. Next, to the society, OSC has provided services and contributions through its continuous CSR projects, and also reported zero fatality rate as of last year. Lastly, regarding the governance, the company reported 100% board attendance, and also recently launched EJIP program, an employee joint investment program to give incentives to its employees. Next, lastly, to prove OSP efficiency in integrating ESG and sustainability practice into many elements of its value chain. OSP has seen an improving EBITDA margin that we also projected to grow to 25% over the next 5 years on the right-hand side. And also we see improvement on EPS, dividend per share, and also a debt capacity superior to that of its peers. And these metrics has clearly demonstrated that OSP has the ability to profit sustainably and also for the betterment of the betterment of the environment, society, and its people. Thank you.
Let's move on to our last investment thesis, affirmative valuation. Our valuation method is discounted cash flow, and the risk-free rate is come from 10-year government bond yield, and our beta is a relievered beta, and the equity risk premium is from Professor the Modern Database. Then we have the cost of equity of 6.93%, and with the cost of debt of 4.9%, we arrive at the WACC of 6.97% and the target price of 36.06 baht per share, which had 10.94% upside potential. Moreover, our target price of 36.06 baht per share also in line with our relative valuation.
Moving on to the risk part, the risk that has the highest impact for us is the economic risk first and the government and the regulation risk. The first risk is the economic risk. The ongoing pandemic affecting the lowest customer affordability, impacted by the rise in the unemployment rate, and coupled with the volatility of the coal and the natural gas price affected. This will affected the decline in the 21.8% from the target market. And for the second risk, government and regulation risk. After the government announced the tax sugar rate in phase 3, the increasing in sugar rate may affect the overall soft drink industry due to the higher cost of burden. However, OSP mitigate the risk by product reformulation and a fast forward 10x by reducing the sugar, gradually reducing the sugar in the early stage before the laws come into force.
For our scenario analysis, the bear case, we land at a target price.
Q&A session, please. In one of your arguments, you said the EBITDA margin will improve from 18% to 20-something. Could you elaborate how you come up with this assumption?
Yes, thank you for your question. The revenue drivers are our 3 key investment thesis, which is like diversified portfolio. So the revenue from energy drinks is quite stable, and the functional drinks and the cannabis drink will be the key growth drivers. So the top line will increase, and for the cost part, the OSP has a fast forward 10x program, which will reduce the cost, overall cost, which we have the ESG integrated in the cost. So this will.
Okay, sorry to cut your answers. From the top line, do you think they can increase the product selling price to improve their margin? And if they can increase the price, why competitors will not cut the price to compete with them, which make them cannot increase the price? Second, in terms of cost cutting, which part they can cut the cost?
In terms of price, OSP outlook is to not increase the price, but they're going to do premiumization by reducing the consumption unit. So the price per liter is going to increase. Yeah. And for the cost part, we think that the energy consumption, they already signed an MOU with Susan. They've just signed it this last year in Q3. So the cost is not reflected in the price yet. And this Susan will implement solar energy for OSP. So this is expected to reduce the cost.
How about competitor? Will they compete aggressively and no one can actually raise price? Actually, everyone has to decrease price. Yes, basically competitor, will they cut the price to compete?
In our perspective, this market segment, the blue collar market segment, they're highly sensitive to price. So if they heighten up the price to be more expensive, there's a risk that they might not be able to maintain their market share because nobody is going to buy anything expensive. But we see that the company can just maintain the price at 10 baht. Like it's like the market price threshold that all the competitors are offering, and they can reduce the cost in every single unit by product reformulation, reducing sugar content, reducing volume of each bottle, and still maintain the same price and sell. I hope that answers your question.
Add on to that. But OSP has a strength in product reformulation. So as my colleague said that premiumization is a trend in this industry, but OSP has a strength in product reformulation. So each time when they do premiumization, the product always attracts the customer. You can see from the market share that always increase in every year that they do product reformulation.
So then how about Myanmar? How much do you incorporate Myanmar into your assumption?
We have corporate Myanmar in like 15% market shares. Can you move to the appendix at the end? So in the Myanmar market, we corporate Myanmar in
So for Myanmar, the outlook for us is going to have like a little growth because the military situation is not quite stable yet. But we believe the One Belt China initiative is going to be the growth driver in Myanmar and keep the economy growing. Because Myanmar is like a strategic location of China, and this will improve the GDP of Myanmar.
So how much is actually your proportion of Myanmar revenue or like the bottom line in your assumption? Right now, as that you presented.
The revenue in Myanmar, we calculate it like in the 15% in the international market because the Myanmar is had a highest proportion in the international market.
Can I ask? Sorry. Can I ask about the risk matrix that you showed, where you have the different risks on the slide? I saw you put the raw materials probability very high, but the impact is quite low. Could you elaborate more why you think that the raw material price impact is not significant?
So OSP is planning to use 100% recycled bottle in the next 5 years. So we think that the coolant price will not heavily impact the cost. And Also, for the sugar price, the trend is reducing sugar consumption and also affected by the tax, so they have to reformulate their product to reduce the sugar, so sugar price rise will not quite affect the cost.
So you mentioned recycled bottles, so you mean that they are going to increase the recycling of the ready-made bottles?
Yes.
Okay. Do you have any data from where to where they are planning to go on that?
So they're already partnering, they've already used some of their bottles from Krungthep Thanakit, which is the biggest recycling sorting center of recycled bottles. Yes. And they're also helping small garbage collectors in Thailand to actually use the recycled bottles.
What about the aluminum? They use aluminum also in some of their products.
Sorry?
Aluminum cans.
Oh, aluminum
Do you know how many percentages in glass versus aluminum?
Right now, we don't have any data for aluminum cans recycling, but our product is mainly made from glass bottle.
We only know that the production capacity for aluminum cans is about 400 million cans, and we don't think that it's a big proportion that we would take into account into evaluation.
So since you didn't present the valuation part, so what's your recommendation on my recommendation is based on which method? So I know what is really your point of view on the recommendation. What is your methodology that you use for your buy recommendation? You use P, you use
The target price of 36.06 come from a discounted cash flow model.
Yes, and then where comparing to other peers in the industry, so you think is comparing to other peers, which one is actually the most you think the top pick of your recommendation if you get to choose from this list? Is that still the number one OSP, or you think others?
To clarify on that, you're asking whether we prefer which competitor in the market, in the same market?
Yeah, and why?
Okay, so let me answer on that. We still believe in OSP organic growth, although CBG has reported a higher profit margin over the last quarter, but we see that CBG has a growth strategy that is quite aggressive by acquisitions, by expanding into the lower end of the supply chain, increasing distribution channels, launching CJ Express, and it could take a toll on the cost margin of the company. So that's why we believe in OSP organic growth, through expansion, stable growth, and stable dividends. And CBG, we see also that CBG has a higher portion of revenue coming from Cambodia, which is more than 50%, and that could be quite risky going forward, considering the political turmoil and a really small market size compared to our market in Myanmar.
Do they have higher growth comparing to CBG? Higher growth?
Higher
Growth?
growth, yes. In terms of profit margin, yes.
Profit? No, I mean growth.
Growth.
Bottom line.
CBG has higher growth, but that's because their revenue comes from foreign markets. And
Thank you so much.
thank you.